Welcome to the President and CEO Focus on the Middle Market podcast series, where President and CEO founder Paul Stukel discusses middle market issues with business leaders from across the nation. Today, in part one of a three-part series, Paul speaks with Ken Esch, partner of PwC's Private Company Services, about the encouraging results of their second quarter Trendsetter survey of private middle market companies.
In reading the report and the summaries and the conclusions drawn therefrom, it struck me that the word stability kind of jumped out at me in terms of growth, right? I've read sort of commentary on this where some people are saying, well, gosh, the relatively slow growth rate is a good thing because it's sustainable, which immediately says to me, quote unquote, this is the new normal.
Yeah.
You know, and I don't know, is that the feeling you got from reading this, or am I being too pessimistic about that?
Well, I think that stability is probably a good word for companies' feelings about their growth prospects and what's going on in the economy. And one of the things that I point to in support of that is just the low numbers of pessimistic readings that we see in the survey. And particularly maybe the one that's changed a little bit here recently is the number of survey participants providing negative or pessimistic views on the international markets. Now that's dropped down to about less than 10%, which is kind of where we've seen readings for the U.S. economy over the last year. But that's new for the international market.
Yeah, I mean it's a big. I mean the optimism number for the international side of things is extraordinary. I mean 92% is pretty good number. I mean now that's either people saying it's growing or it's not changing. But
yeah.
But your point, your point about the 8% that people thought it was negative. That's a really positive outlook.
Yeah, and I think it's relative, right? That they have seen some pretty troubling times in the foreign markets over the last few years here. But I think that most of the survey participants believe that maybe the credit crisis in Europe is behind them. And while they're not looking at extraordinary growth opportunities, it is stable.
Right. I got to tell you, it'll be fascinating to hear the third quarter results because of the since this survey was taken, there's a lot of, I mean, the Europeans are once again pulling their skirts over their heads about their lack of growth. That's probably a terrible way to put it. But I mean, the recent reports from Europe are not looking particularly good in terms of growth. So it'll be interesting to see how that all plays out and if those numbers will hold. But it's obviously reasonably good news.
Right.
One of the things that jumped out at me was the capital expenditure numbers were pretty impressive, and that's obviously always a great leading sign.
Right.
I guess one question I couldn't discern from the report was, do you have any sense of the capital expenditures being focused domestically here in the U.S. Or CapEx overseas? Do you have any sense of that? I may have missed it.
Yeah, we're delighted to see the improved readings around capital expenditures. And as you may have seen, we had 36% reporting that they were, going to be increasing their capital expenditures, and that's the highest number that we've seen in the last couple of years. They've also increased, the percentage of sales that would be devoted, to CapEx, which I think is a very strong indicator of the participants, views on where the economy is going and what their opportunities are going to be over the next year plus. So I think that that it's providing a further stabilizing sign, of where they think the economy's been and where it's going. With respect to your question about domestic, versus international, it is both. They're continuing to invest in the U.S. economy, but they are looking at opportunities in the foreign jurisdictions, as well. And I think that that's in response to expectations about growth opportunities. For the last year, we've seen that that the survey participants have viewed, the U.S. economy as perhaps, a higher growth opportunity than some of the international markets, which has been a little bit of an anomaly, compared with the last several years where we've seen that the international marketers expect higher growth rates. So probably seeing a little bit of a recovery, on the foreign markets and the growth opportunities there, and that's backed up by some additional capital expenditures in those markets.
Check back tomorrow for part 2 of our discussion with Ken. Thanks for listening.